Welcome to our daily market analysis, and this is for trading on June the 18th, 2020. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. All right, so we'll start off by taking a look at our calendar here. So in terms of the news that we have, so first of all, this was another day when Powell was testifying in front of the Congress, and this is going to continue for another couple of days. And based on his testimony, markets do move, the stock markets move, and as a result, we have seen swings in the Forex market as well. And as we have talked about before, this is a really volatile week. We have options expiries, we have like I said, monthly, quarterly, and 6-month options expiries, and then we have Powell speaking. So all in all, a lot of stuff going on in the markets right now. So the stock markets are all over the place. Another thing that's going on right now is the increase in the number of COVID-19 cases. We have seen the coronavirus cases have gone up in China, and China shut down schools, and they closed certain markets and certain parts of Beijing. And Beijing was one of the places that wasn't too badly impacted by the coronavirus last time around. So this time they are basically being impacted. Other than that, so they put some people in lockdown, or certain parts of Beijing, I should say, in lockdown. And then now, and also we have been hearing that the number of coronavirus cases have increased in the US as well. So Texas, Florida, all these states that opened before what the medical professionals had advised are now seeing an increase in the number of infections. Now, there has been an increase in the number of deaths as well. So this is something we'll have to keep an eye on to see if the number of deaths go up. That will have a negative impact, or it increases substantially, because what we are seeing is the number of new cases that we are seeing now are more in the younger people, which are able to recover more quickly, or they're not impacted as negatively. So number of hospitalizations have gone up as well. So we'll just kind of track this as we move forward here. If we see that this trend continues with the number of coronavirus cases going up, that is going to be negative overall for the stock markets, and as a result, we are likely to see movement in the Forex market as a result of that as well. Now, and then we have also seen other countries like Brazil, India, these countries, the number of virus cases are exploding. So all in all, we are seeing a continuation of the first wave, some of the second wave coming around. And right now, market has been ignoring them. It's sort of is starting to react to that, but it's in a wait and see sort of a holding pattern at this moment. But if the negative stuff goes on, that is going to tip the scale, and we are likely to see that drop. So that's what's overall what we're seeing in the market right now. Coming up here, we do see that GDP numbers here for New Zealand were worse than expected, but that's not a big issue because economy was closed. So I wouldn't expect a big negative impact from that. And then employment numbers, same thing here. They are expected to be worse than the previous ones, or they're expected to be bad just in general. So unless it's really bad, I don't think that will have much of an impact on the Australian dollar. Now, tomorrow, this is going to be another volatile day, especially if you are trading British pound here. But before that, Swiss National Bank here, they're going to set their policy rate, or they're already negative and have been for a period of time, so they're not expected to change anything. But it's always the press conference that can make a difference, because this is where everybody gets to ask, journalists get to ask questions, and based on those questions, market tends to react. So keep an eye on this if you are trading Swiss franc here. Now, British pound here. So tomorrow we do have our Bank of England here. So there was a lot of speculation in terms of Bank of England going negative on their interest rates. So I would not expect that to happen at this meeting. Things have changed a little bit since that speculation was happening a month or two ago. At this point, I would expect them to basically say what Fed has been saying and what the other central banks have been saying, like Bank of Japan, and all of these. So basically, I'm expecting them to say that they're going to increase the asset purchase program. So they're going to put more money into the market. But other than that, I would not expect them to really go into negative interest rates at this point. They probably will be in the wait and see mode more so than not. So if that's the case, if they hold things as they are right now, just with only with the increase of the bond purchase program, that is going to be positive for FTSE, so for the stock market. But if they do even talk about negative interest rates, or if they cut interest rates, that is going to be negative for British pound, and we're likely to see that drop. But if they hold everything as is and they say they're going to wait on the negative rates and they're not going negative at this point, that is going to be positive or at least neutral for pound. So we'll see how that goes. But again, this can be quite, it can be market moving. So I will watch out for that. And then we have employment numbers out of Canada. They were quite high. So if the numbers, but at this point, I think if the numbers are more, that will be negative for Canadian dollar. Otherwise, if they are in the vicinity of what the previous numbers were, I think that would be okay. That wouldn't have much of an impact. Right now, how the stock market feels, the sentiment in the stock market is likely to have a bigger impact than on the Forex market than anything else at this point. Now, we do have employment numbers out of the US. We are going to see a positive number here. So more people going back to the jobs and stuff. And if that's the case, that is a positive thing. And that will be good for the stock market. So in that case, our dollar crosses may actually drop as a result. The stock market is likely to go up, and the yen crosses are likely to drop as well. No, sorry, yen crosses are will go up. If the stock market goes up, the yen crosses go up as well. So that's what we have coming up here. And then let's take a look at our charts now. Okay, we'll start off with euro dollar. So yesterday we were looking for euro to drop a bit. Price pulled back, and we've had a bit of a drop. A lot of the trading was sideways today. And we do have a lower high here, so bias is still to the downside. In this case, we may get a pullback into 1.1265, so potentially something like this. And then again, the support here at 1.1200 will be important. If it doesn't go through, this can go back up, then it can go back into the range, because if you take a look at it, essentially this is still trading in a range. It hasn't really broken the support at this point. So much of this has been sideways. So we'll have to wait for price to really drop through the support for a continuation to the downside. But the bias is bearish. First target is 1.1190, or I should say 1.1200. And then below that, we are looking at 1.1150. So bearish bias here for euro dollar. Pound dollar here, this one is looking bearish as well. And the only caution here will be Bank of England tomorrow. I would expect volatility, but that is into the beginning of the New York session. So overnight though, we could see pound drop. So bias is still bearish for pound. And in this case, the target is 1.2450. So I'm looking for it to come back into that, into the pin down here. So bearish bias for pound. Aussie dollar here. Aussie, today's candle close is neutral. We have seen a lower high, but not a lower low. And overall, if you take a look at a 1 hour chart, it didn't really do a whole lot. So now I am looking for price to drop further here. So bias is neutral though, because for it to really turn bearish, we need to see a drop through the support level at 6835, and if it doesn't, this can happen. So in this case, my bias is neutral. Once it drops through this 0.6835, next target is 0.6780, and then it can drop further into 0.6685. So for now, bias is neutral here. And if it breaks through the high of today's candle, then we're likely to see it go higher, and it's likely to continue to the positive side here. So neutral bias. New Zealand dollar, we have the same thing here. We see that price has been stuck within this very, very narrow range over the last few days. And in this case, price has gone into the resistance level right here. And as we see, price has been stuck below that. So as long as price holds below that resistance level, bias will still remain to the downside. So right now, my bias is neutral to bearish here. So that's what I'm expecting. As long as price holds below 0.6480, I'm looking towards a target of 0.6390. So neutral to bearish bias here. And once it goes through that resistance, then we are into this support resistance level at 0.6340. So bias here is neutral to bearish for New Zealand yen. But same thing as Australian dollar. If it breaks through this high, then I will look for it to continue higher. But for now, bearish to neutral. Dollar CAD here, this one wasn't able to break the support. And as such, we are staying, this is looking bullish now. So in this case, if price holds above this level here, 1.3500, I will look for this one to move higher. So bias is bullish. First target is just the top of this candle here at 1.3630. And should it go through that, then it can go into 1.3685. Now, the only concern here would be the resistance. If price holds below today's high, this one can turn around. And with all of these, if the stock market becomes bullish again, if it starts to take off to the upside, then these are likely to follow, which means our US dollar would drop, which means dollar CAD would drop, and our dollar crosses would, the rest of the dollar crosses are likely to go higher. So just keep that in mind. Right now, we are very much being driven by what's happening in terms of sentiment in the stock market. Okay, so this one is more bullish here, so neutral to bullish here. All right, so let's take a look at silver here. Silver is still holding below our resistance at 17.50. Bias is neutral here. What we are looking for is the reaction to the resistance here. If it does not go through, if it holds below 17.50, I'm looking for it to drop back towards 16.90. So bias for the time being is neutral. But should it go through though, it does have room to go to the upside here at 17.75 and 18. For now though, as long as it holds below this resistance of 17.50, this is likely to drop. So neutral bias for silver. Gold here, gold is into this resistance level. And as we can see here, it is struggling with this one. So today as well, we did see a drop initially, or we did see a drop and a pullback. Now this is neutral. Again, it's struggling right now with the 1729 or 30 level. If it goes through, I will look for it to go into 1745. If it holds below, we're looking at 1712, and then potentially towards the bottom of this pin at 1703. So for now, neutral till we see what happens with this resistance here. Oil here, oil did drop today. And as we can see, there was a very small move, but again, we are seeing lower highs here as well. So bias is bearish here. First target is 37.00 and then 35.50. So bearish bias for oil as well. So if oil drops, Canadian dollar drops as well. Okay, copper here. Copper has been trading in a range for the last few days here. Now it is into this resistance here. We do have a bullish candle close, but this is This candle is has not been able to, excuse me, this candle has not been able to break through the resistance here. So this is more, I'm more neutral on this. We need to see how it reacts into 2.56. If it holds below, I will look for it to come back towards the bottom of the range here at 2.50. So we'll have to wait and see. If it doesn't go through 2.56 to the upside, if it holds below, I'm looking for price to drop. And then we could see another drop towards 2.46. So bias is neutral here for copper as well. Bitcoin here, we did see a drop for Bitcoin. It is still trading in that narrow range, but has a little bit more bearishness in it now because, as we can see, price held the resistance. So we could see another leg lower here. In this case, the first target is the bottom of today's move, which is 91.80, and then 90.50 is the next target here. So bearish bias for Bitcoin as well. S&P 500, we have a doji here. So in this case, looking bearish here, we see that price held the resistance, and now we have a lower high, and we have a pin bar. So bearish bias for this one. Next target here is 30.80. And then beyond that, we are looking at 30.20. So bias is bearish for S&P 500. And just keep in mind, if the stock market is dropping, look for your yen crosses and dollar crosses on the Forex side there. Okay. Nasdaq here, Nasdaq also, this one is neutral, but it has made lower high here as well. And this one could drop further. So neutral to bearish is what I'm looking at here. 98.40 is the first target. And then we're looking at 97.35. So neutral to bearish here. But this is not a done deal. Just keep in mind, there are options expiries this week. So, which means we could see things get volatile. Okay, so the first target here is 25,850, which is, it's almost there. The next one is 25,250. So bearish bias here for Dow Jones as well. DAX here, DAX, we see that price has held below this resistance level here, which means we could see a drop. So this is a pin bar here. Basically, I'm expecting a drop as long as it holds below 12,450. I will look for a move back towards 12,160. And if it continues, we are likely to see it go back into 12,000 basically. So this one is looking bearish as well. FTSE here, we do have a pin bar, so bias is bearish. Now with FTSE, with Bank of England, if they say we are going to open our purse strings some more and they put more stimulus into the program, into the markets, then that can be positive for the stock market, and we could see FTSE go up as a result of that. But for now though, based on the technicals alone here, this is looking bearish from technical standpoint. So next target here is 6,100, and then below that we have 60,050. So for now, bias is bearish for FTSE as well. Okay, Nikkei here. Nikkei is looking bearish as well, and we're almost into the first target, which is the low of today, 22,200, and then below that we have 22,000. And we'll mark one more just in case, 21,765. So bias is bearish here. So all in all, looks like the stock market is looking bearish right now. So we'll just keep an eye on it, but be careful because things can turn. All right, so that's it for today. Any questions?
Oh, all good, Raman. Thanks very much.
You're welcome. So we'll wrap it up. Have a wonderful evening, and I'll see you tomorrow.